course of Introduction to Stock Markets, we are going to learn how do the stock markets actually function and what all intermediaries are involved within this. Who are participants and how you can become a participant and make money from the stock market. Welcome to Chapter 1, the overview of stock market. Now, how many of us have ever thought about starting a business of our own? When we think about starting a business, what all do we need? For example, if I want to start a business of, say, manufacturing pens, then what all will I require? I'll require a space, an outlet where I can actually do the manufacturing process. Then I'll require the raw materials to make the pens, as well as equipment, machinery, which go through the process of making the pens. And besides that, I'll need capital to invest in employees and labor, as well as marketing and distribution costs to see through the sale. Welcome to Chapter 2, the regulatory framework. Now, in this chapter, we are going to understand why we need a regulatory framework as well as what their duty and responsibility enlists upon. Now, the stock market of India is a very lucrative platform which attracts individuals and corporations from diverse backgrounds. Anyone who transacts in the stock markets is called a market participant. And in the previous chapter, we learned what kind of different market participants we have in the Indian stock markets, namely retail, NRI, HNIs, domestic, as well as foreign institutional investors. And as we understood, where money is involved, emotions are involved, and this can lead to malpractices or unfair practices. And India in itself has seen a lot of unfair practices in the past. If you have seen the movie Scam 1992 or Big Bull, you know what I'm talking about. Welcome to Chapter 3, Primary Markets. Now, whenever a company wants to raise funds, it has multiple options available. Taking funding from its promoters who have put in the seed capital, raising funds via venture capital or private equity investors, or taking funds from banks as loans or other debt instruments also. Then comes the next option where a company can issue an IPO, which is called as the initial public offering, via which it can raise funds directly from the public. Welcome to Chapter 4, Secondary Markets. In this chapter, we'll understand how price fluctuations actually happen and how do market participants make money. So when we talk about a price, it is nothing else than a function of demand and supply. When there is a buyer willing to buy at 100 rupees and a seller willing to sell at 100 rupees, there is a transaction which happens at 100 rupees. And this transaction, we can see it happening on the exchange, which can be NSE or BSE. So you use your stockbroker's platform to log in online and make this trade. So when you log in and see a particular stock, when you select, you will be seeing there will be multiple prices going in a flicker of second. That particular price is nothing else than the LTP, which is the last traded price. And in that, you will see a bid and offer also going on, which constitutes the market depth, which is nothing else than a buyer's bid and a seller's ask.